this weekend review. Appreciate you all being here on this lovely early summer evening. I guess I probably lost a few people to the Miss USA contest and the Tony Awards. Just kidding. That's where my wife is, actually watching the awards with somebody who cares for the awards, that is. What a week. You can see I titled mine Breakout, and we'll see how far it goes. If you saw my webinar last week, which I sort of screwed up the sizing, so it made it difficult to see anything, I said melt up or melt down, and then I thought something was going to happen. I didn't think we'd have 2 days of interesting where, I don't know about your portfolio, but at about 10:30 Monday, I thought it was going to be a really bad week. Same thing happened on Tuesday. By 4 o'clock both days, I was making money. And then Wednesday, Thursday, and Friday went crazy. It was actually a fantastic week. And it'd be interesting to see if this is a breakout and how long it lasts. And that's kind of what we're going to look at tonight. I'm planning on going about 90 minutes. Yes, I did go fishing with the dog today. Living down here in South Florida has its advantages. One of them is it's pretty easy to go fishing. Get point in the right spot. Disclaimer, as always, this is for educational purposes only. Any recommendations I make are in the spirit of education, not investment advice. I'm a doctor, not a broker. Be aware that most physicians lose money with their investments. So take anything I say with a big grain of salt. And I truly am independent. I appreciate George letting me use his web software, but I pay for my programs just like you do. And I think that allows me to be perhaps a little bit less biased, but also allows me to talk about more than just HGSI. I always start with this, and I add things as I read things or I decide other things deserve to be here. I've been trading for a long time. Well, let me back up. I've been stupid in investing without knowing what I'm doing for a long time. Then I went through a period of time of education and getting better at investing. And then over the last couple of years, I transitioned from long-term investing to trading. So I've been doing something in this business probably since the early 1990s, which is a long time. And like many people in the early 90s, I actually blew up my account multiple times, mostly because I relied on other doctors giving me tips that they heard about from their next-door neighbor's uncle who's in the business. Hopefully I don't do that anymore, and neither do you. I heard Ian back in the early 90s at a telescan session when he came to Atlanta, and something he said really resonated with me, which is he said, Jeffrey, I'm not a guru. I'll teach you to be your own guru. And I think that's what we all need to do, is we need to become our own gurus. And you can rely on whoever you want to rely on, but at the end of the day, the only one you can get mad at if you lose all your money is yourself. So I've tried to surround myself with smart people that help me become a better trader and to become my own guru, so to speak. So just to point out who I have, Ian Woodward and Ron Brown, they're really much of the techniques and story of high growth stock investing. The program, HGSI, is separate from them. That's by George Roberts, and they obviously are intertwined. Much of what Ian has taught me probably came from what he learned from listening to William O'Neill and Cancellum. And then, to our generation, the next O'Neill, or the O'Neill disciples, Morales, Katcher, I know plenty of you participate on their board. Alexander Elder, recently went to a live session with him. Always learn a lot from Dr. Elder. I'm a candlestick guy, and I like Bigelow. Minervini and Stein sort of apply the types of things that I have learned from the people I've mentioned, and they've written some, I thought, excellent books, both of them, and worth the read. Van Tharp would make the argument that it doesn't matter what stock you pick, it's how big your position size is and how you do money management. And after all the years of trading, I probably agree with him. And then a couple other things here. Anna Cooling is one of the volume spread analysis folks. You've got her, you've got Gavin with Trade Guider and a few other folks out there. I think It's an interesting read. It makes sense. Pascal Willane is a way of breaking out what he calls effective volume or the institutional money. I have a scan that I purchased in Thinkorswim, which helps me do that. And the point there is simple. I want to be doing what the big guys are doing, and that might help me understand that. And then other recent ads, John Person, great trader, has been trading since the 80s in the commodities world. I used to think he was all about commodities, but he's not. He trades short time frames and swing trading. He's written a number of books. That's his most recent book. I've read several of his books. That book was probably the best read. If you live on the West Coast, he's actually doing a live meeting at the Marriott LAX Sunday and Monday, a week from today. I'm actually flying out to that, which is kind of funny because he lives a mile away and we went to dinner the other night, but I'm coming to LA to listen to him. And then I decided I'd better add him because I talk about him all the time. My favorite Canadian, his name's George Lee, and we do a lot of trading together. The Thinkorscript, the Pascal scan is not Thinkscript or something I have made for me. So these are the influences that help me do what I do, and everybody needs to have their own style and their own influences. And these are some of the ones that made a difference to me. Not on the board, and you can find some of this stuff at chartsynchat.com, is David Elliott, who passed away maybe 2 years ago now. A brilliant trader, great teacher, and really gave back a lot to folks, did a lot of free programs. Now, I have a lot of programs. You've all seen this before, but I think it's important to reiterate because God forbid you see my desktop. I need a real-time program. There are pros and cons to both TradeStation and Thinkorswim. I use them both. I've got some indicators that I developed for TradeStation, which I offer for sale. You won't believe me when I say that at a very fair price, but if you buy a lot of indicators, they're pretty cheap. And then I use HGSI for my analysis, as you'll see here. EdgeRater, which actually picked up some nice new things. Hey, David, nice to see you here. I'm going to show you seasonality on EdgeRater and maybe Magenta. And then I use MarketSmith sort of as my backup resource to HGSI. It gives me some better, I think I would say, or more extensive earnings. I always look at this chart and I try and guess where we are. And I'm starting to feel like a broken record because every time I'm here I'm saying, you know, you've got your 4 stages. You got your ambivalence, your markup, your uncertainty, your fear, and you start all over again. And what's happening is we're going into this uncertainty and maybe we're getting a little bear trap, but the next thing you know, we have another leg up and another leg up and another leg up. And that'll only work until it doesn't work anymore. And, you know, when we get the big correction, it'll hurt. And small caps have gone through their big correction. But, you know, as we'll see, they made up for it this past week. And then the reason why that's important is as you decide what to buy and when to buy, don't fight the trend. You've heard that 1,000 times. Well, in an uptrend, you want to buy at pullbacks where the green circles are. But reality is, unless you're buying up here at the end, it didn't matter where you bought. In a downtrend, I don't know any place to go long. I short retracements or I buy puts. And we've had a lot of time where we've been going sideways. Oops. Hope that didn't. I guess somebody type in, you can still hear me. Good. I just had some funniness in my phone. Okay, good. All right, I made a funny noise. Maybe it was from lightning. We've spent a lot of time in the Darvis box or going sideways, in which you have to manage it different. When you're going sideways, you sell resistance, you buy support, and you look for breakouts and breakdowns. And you know, one of the reasons why I like HGSI is you go through this period of ambivalence, markup, and fear. There's some unique indicators that are built into HGSI, some of which developed by Ian and Ron, one that I had part in developing. And I use those as I try to understand what the market is doing. Obviously, your gut gives you a lot of information as well. Now, some of the things that we do in HGSI land to understand what the market is doing. One thing we do is we try and build surrogate indices. And we use these indices, typically we try and build an index of leaders. And we use that surrogate index to give us a hint, an early warning sign of the market going through a big change and rolling over. So one of the ones that Ian brought to us, gosh, 18 months ago probably, was the canaries. And back then the market clearly was being driven by the likes of Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix. And then in March, before we had our PV meeting, Palos Verdes meeting with Ian and Ron, the canaries rolled over. And you could see the canaries up until late were living on the 200-day moving average, which is when they died and went to canary heaven, and you can see the canary at the bottom of the cage. But Ghilardi brought his CPR machine, and they started getting up off the mat. And I think, you know, it remains to be seen where they're going to go from here, but they're now above the 8, 17, 50, and 200-day moving average and looking a lot healthier. More important to me is a list that we put together in March. And what we put this list together, not because it makes a pretty tight-looking chart, but we put this list together because we wanted to create a list of leaders. Next week, if this market hasn't rolled over, or in 2 weeks before we get together, one of the things we're going to do at my live meeting is actually put together a list of leaders. The reason you do that is one of the premises of high growth stock investing that we've learned from Ian and Ron is that leaders roll over first, or they might roll over the hardest. And so we build the leaders index because we know that when this stops working, that the market probably is going to either pull back or go through some serious rotation. What's interesting is, unlike the canaries, we put this leaders index together right about where my arrowhead is. Unlike the canaries, the leaders never broke the 50, and they're out to all-time highs. That alone makes me somewhat bullish, besides watching my portfolio the last week. I recognize we're long in the tooth on this bull, but these canaries, rather than, or canaries, these LLURs, rather than breaking, are breaking out to new highs. So what were the market themes as I did my review this week? Well, Monday and Tuesday were confusing. I think when I put melt up or melt down, it took it literally, and they did them both on Monday and Tuesday. But on Wednesday, the EU joined the QE bandwagon with rate cuts and promises for quantitative easing. Thursday, we had, I thought, disappointment on new jobs, but I guess since the unemployment rate was steady and Obama could beat his chest that we've surpassed the pre-crisis employment numbers, which I have a hard time believing, we ran up. And then on Friday, small caps joined. So we are in a rally across big, little, and small stocks. Question may be how long this rally lasts and where do we go for. I wonder if we're not going to go to 2,000 before we roll over, and we'll talk about that. Wolf packs, I look at a lot of charts. This morning I looked at about 700 of them before the vote. And, you know, it's a lot of the same old, energy services and midstream. Kicking butt. Midstream to me, I guess, is a lot of the pipelines and the services side on the gas, big dividend players. But those are leaders. I talked about last week and the week before. And the week before, I think about Halliburton. Take a look at Halliburton, new highs. Auto parts, not necessarily the stores, although AutoZone and some of the others look pretty healthy, but Gentherm and Borg Warner and Magna, a lot of the manufacturers of the original equipment. Semiconductors continue to do well. And then some things that popped up this week that I didn't see as much before are some of these infrastructure companies. Chicago Bridge and Iron, yeah, we've seen that. But there have been 2 or 3 others made my list, and we'll go through it as we go forward. Now, when I was at Elder's meeting, and I want to give Alex credit for this comment, one of his things he did is, what is your A trade? And he had the attendees. Now, I'm not an official spiker. I'm just a lurker, so I wasn't asked to go up and talk. But he had everybody who was a spiker come up and demonstrate what their A trade is. I think that's a great idea, and those that are coming to my meeting better be prepared to come up to the front of the room if called upon, one or two of you at least, and tell us what your A trade is. Now the benefit is then George and I will make scans and filters so that you can find your A trade. My A trade is simple. If you watch me for a while, you know what my A trade is. I scan for my favorite setups. I want uptrends above the 200-day SMA. I want to pull back to support. That might be seen by a squeeze. It might be free parking, which is what we call the 50. It might be back to a prior base. And it might even be down to the 200 and after the market's been trashed. I make my list of stocks that meet these criteria, and then I wait for my triggers. My triggers might be something that shows momentum coming in, whether it's a PSAR reversal, a mobile breakout, a kahuna, a pocket pivot, or a Bible gap up. Gil this week on his chat room made an interesting comment, and sometimes with Gil, you don't know when Gil's being honest Gil or Gil who likes to make jokes. And I think it was honest Gil said that he likes to buy pullbacks more than the pocket pivots, and that he wants to be in them before they have their pocket pivot or after they pull back. I don't know if I believe him or not. I can't tell sometimes when it's the honest Gil or the facetious Gil. But I use those as my momentum. Now, I place an order when I get that signal that says that the stock trades above X, then put in a buy limit order Y. And on a perfect setup, and I call those pullbacks ready to run, I may actually put my order in overnight, again, a conditional order. Once I put my trade in, I place my stops. Now, if I'm buying on support, my first stop is intelligently placed, I hope intelligently, somewhere close to that support. Once my trade moves my direction, I try and take my stop to break even. When I've got 8%, I go to a trailing or a chandelier. But, and this is something that O'Neill teaches, if I get a big move, 20% in the first 2 months, I take my stops off. Now, may the stop god not come down and strike me dead, but frankly, I don't like, I'm willing to give a lot of rope to big winners. And it's made me a lot of money, but that meets my style. But it also means every once in a while I regret doing that. These are typical stocks that excited me. This week, and this is not Friday's, it's going back a couple of days, Blackstone is a stock that I already have a big position in. I was looking to add more on a pullback. They're an asset manager. I think they pay a 7% dividend. They were $8 stock, $6 stock back in 2009. So I've had a three times return to where they're at today and more. And it went sideways. So in an uptrend, went sideways, and I'm not going to touch it until it really declares where it's going. And it came down here to the 200-day moving average. Now, I like the company. I like the dividend, but I don't like buying it until I saw a reason. And then I saw mobile breakouts coming in. I started seeing green on top. I saw pocket pivots, and I got back in on this date, where I had the kahuna. And that actually was at the same time it went through the 8-day and the 17-day moving average. I'm also looking at getting in it again on Friday as it broke above the 50 with the pocket pivot. And I'll continuously buy this stock because it's been a good performer for me, and like I said, it pays a massive dividend. Here's another one that I'm in, and I got into this stock on Friday. This is USG Core. Now, those people that know me know I'm a sucker for earnings. And you can see up here where my arrow's going, just massive earnings per share growth, quarter over quarter. And when it says 1,300, it's not 14 versus 19. Obviously, that's not 1,300. It's 3 of 14 versus 3 of 13. It's 12 of 13 versus 12 of 12. So I see great earnings per share growth continuing. That gets me excited. The Bongo Weekly's red, everything else was green. The yellow was a squeeze. So I pulled back And if you look at this, it wasn't an uptrend. It pulled back to deep support, deep doo-doo, maybe Gil would call it. And I waited until it broke above the 50 on Friday. On Thursday, I had a kahuna, and I had a mobile breakout from a squeeze, and I put my buy-in right above the 50-day moving average. So I'm now in this position. Now, the nice thing, the ticker here is USG, US, I think, G Corporation. I think they make gypsum, and they had a bunch of legal problems. But those are, I think those are done. What I like about this, and I'll look at it on a regular chart later, is I know where to put my stop. My stop's just a little bit below that 50-day moving average. I'm not risking 8% on this. If I wanted to be daring, I might put my stop below the 200 and give it a lot more room. I might go halfway. But the bottom line is, since I'm buying it off the support, I don't have to give it a lot of rope. Now here's one that I'm looking at for Monday. And this, I think, is a cloud play. I can't remember. It was one of the stocks that ran up on no earnings and got to be expensive. Double top, rolled over. But look where it's sitting now. It's sitting on a confluence of the 17, the 50, and the 200-day moving average. It had a mobile breakout on Friday going green above. So I'm going to watch the stock at the open, and I'm going to probably, unless the market is sick, the symbol is AMBA. Unless the market is sick, this is something that I might have interest in. This line here, as well as the group strength. So I'm looking for stocks that were in an uptrend, sideways, pull back to support, and it looks like they're moving again. That's how I like to trade. Now, my summit is sold out. I've decided that I'm going to record the summit, and then I'll post it on the HGSI board at a minimal price. The videos can't be so minimal that the guys that paid $1,100 to come and paid their airfare will feel like they got cheated out. But I'll try and make it so it's affordable if people want to download that. I also want to announce, or not announce, but call attention to 2 upcoming meetings. As far as I know, the October meeting is still on, and it's on the weekend before normal. I'm going to be in Australia. I know George Lee is planning on attending, and it wouldn't surprise me if we're in that zone still where they're asking for people to sort of indicate that they're coming so that they keep the meeting going. So let Ron Brown know, and you can do ron@highgrowthstock.com to email him. And then George Lee and I will be doing a meeting in November. We're still discussing whether or not we do it before or after the Las Vegas Traders Expo. The Traders Expo is Wednesday, Thursday, Friday, Saturday. So we would typically do the meeting Sunday morning, or Saturday night perhaps, then Sunday, Monday, and go home Tuesday, something like that. Maybe Sunday start, Monday, Tuesday, go home Tuesday night. And typically we would do it before, but we're talking about doing it after. The 23rd to 25th gets close to Thanksgiving, so I'm checking hotel suites, and we'll let you know. We'll make an official announcement in the next week or two. And hopefully,
Jeffrey, this is George. The Palos Verdes meeting is on, and there are orders coming in for it already.
Perfect. Yeah, I couldn't find it on the website. I guess it's only in the order page. Perfect. Thanks, George. So everybody, the meeting is on in October. And you also, as you get ready for the week, you need to know what to expect this week. And looking at this, if you're playing energy, the natural gas inventories have been big movers. The storage is way below 5-year averages, which is kind of why a lot of these gas plays have done well. And we've got initial claims and continuous claims also on the 12th. So those are things I'm going to look at. I used to worry about PPIs. They've been so small for so long. They haven't been an issue. On the earnings front, I'm not sure Hertz is reporting or not. They've got some accounting issues, which is why they sold off on Friday. Alta has been one of the stocks that some of us have been in and out of. Other than that, not a very busy week. Lulu, Finisar, KBR, are reporting this week. Earnings season is pretty much over. Now let's go look at the charts. Let me kill this. Give it. Kill it. And I'll start with Excel and take a look at the week. So it was a pretty good week last week. So what I do here is I take a lot of my watch groups and I say if I bought the stocks over the weekend, so they'd be the closing price on Friday the 30th, and closed them this Friday, how would I have done? And the reason why I do this is to get an idea of what's working and what's not working. And the first thing is I go through and I say, gosh, there's not a lot of red and there's a lot of black. So that tells me that the bulls are in control. I noticed down here that my sort of kitchen sink, Kahuna, Force, Mobile, Breakout, Pocket, Pivot, and Bible Gap Up, 4 stocks where all those occurred, actually were down for the week 4.5%. So I got to go down here and see what the heck that was. It just seems weird. And I guess it's all driven by this one stock because these are stocks that had all my winning signals. Now, a lot of times they've sort of blown their, they've used up their energy and they base for a while. So it's not unusual for that group to be somewhere in the center. It is unusual for them to be on the bottom. The S&P was up 1.34%. The HGS 100 and the IBD 50 sort of performed with the S&P. My buy list, and I actually stuck my buy list in the Dropbox for the people coming to South Florida, and they probably wondered why I would do that, because that's the only way I can prove that I wasn't making this up. 80% of the stocks that I looked at last weekend and thought they were good to buy were up, and they were up 1.68% if you bought $5,000 of each one of them. Why do I do that? I don't do that just to brag. I do that because if the stocks I think are good are red, then it's time for me to either change my plan or go fishing for a couple weeks. And these are indicators of whether high growth stocks like we buy are working or not, because if the buy watch is not working, then the types of stocks that we buy aren't working either. And then I look at the top, I see that the Marcus Smith Growth had a great week, no big surprise. The GIF All-Stars. I always try and find the top 25 or 30 stocks, and I do it for you at the end of every evening, and they were up 2.36%, so 80% winners on a really unselected, not looking at any triggers, not looking at any setups. These are just stocks that made it to the best of lists. And then the high beta watch list is something I also like to watch. It's up to 108 stocks, and it was up 2.36%. These are all important to me because they show me that the types of stocks that I buy, growth stocks, were working. I look at the Hindenburg and I see nothing, and that's good because I know that if we start to, whoops, that's a little bit more than I need to do. If we see a lot of these things firing, then I know that it's time for me to worry about my portfolio. And as I go back, I can see that since the beginning of the year, I've not seen a kahuna, and the last one I got is December 6th. So they're indicators of trouble. Trouble could certainly occur without seeing one, but any massive correction over the last 50 years has been preceded by a series of them. So don't see that right now. I look at my buckets. Let me try and go a little bit bigger so I can, not that big. So the buckets are basically taking the S&P 1500 and making 12 buckets, one bucket below the Bollinger Band, one bucket above the Bollinger Band, and then taking the 10 deciles between the Bollinger Bands and looking to see where the stocks are living. So the first thing I notice is that 88% of the S&P 1500 are trading above the midline on the Bollinger Band. That's good because in a bull market, stocks will go between the upper band and the midline. All right, so that's a bullish sign. When I look to the left, you might be getting nervous because 30% of the stocks are trading above the upper Bollinger Band, 20% at the Bollinger Band. So half the stocks in the S&P 15 are getting extended. Now, I've done some research, which I'll share with people when we come down here in 2 weeks. I did it on a webinar or a web video maybe 2 months ago. I'm not sure that this sign is meaningful because typically when we get overbought, we go sideways. It's when we get oversold that it looks like it triggers changes in market direction. So let's hope that stays the case. Here is where we triggered the change. This is April 11th. I think right around tax day is when this market moved. But you could see we had over 30% of stocks were trading below the lower Bollinger Band and 86 were red. And then the prior peak of the market, we were at 89%, and you could see 20% on the top 3 bands. So this is perhaps a BB across the bow, not a big shot across the bow of the bulls, but enough of a BB that I may want to wait and see. But that would, that's just one thing to look at. And then what I did here was the last time we got this big, and this was back December 24th, and you could see at the end of the year we were in a similar situation with a similar amount of stocks above the upper Bollinger Band. Then I look at the markets. I've got a new mouse that's kind of hyperactive. That's why when I do something, it happens a lot. So just to reiterate, this is an edge rater view, as have been the last 3. The one that does my group performance analysis, I do that directly in HGSI. So this is an edge rater view, and what edge rater does is taking a number of the major markets on the top, and then it's looking at change in percent B. Those who are HGSI followers know that we look for something called a kahuna, which would be a percent change B of 0.24, or a big kahuna, which is 0.4, and those really stiffen our backs. We look for, and I paint those red. The program paints them red if it's a negative, the deeper red for the deeper percent B, or it paints them green if they're a positive. I guess it's painting them back here gray for whatever reason. The next one looks at percent B. So the first is percent B change. The next one is percent B. Percent B is a wonderful tool because when you tell me percent B on the NASDAQ is 1.0, as it is where my point is, I know that the NASDAQ closed right at the upper Bollinger Band. The next one is bandwidth, and then the fourth column or set of columns, which is the one we spend our time on, is looking at percent B times bandwidth, or the Woody indicator. Green is smooth sailing for the bulls, red for the bears, and yellow is chop. And you can see that we go periods of green, periods of red, with some yellow interspersed. And if I go down to the bottom, what's exciting is we've been in a very prolonged period of chop from about March 11th here until perhaps May 21st, so 3 months. And I think last week I pointed out that we were already the longest period of chop since I started looking at things this way. And what we had was some big kahunas coming in here, across most of the major indices on May 21st, which turns out may have been all clear. We went all green on the percent B, and we've now started turning green here on the Woody indicator. So for those that are looking for a specific HGSI timing system, this is probably the most specific HGSI timing system that I look for, and we're starting to get to a sweet spot with these greens. Now, unfortunately, they can change tomorrow. Let's shut this for a second. Then I like to do some confirmation, and I bring in my trade station, and specifically my elder indicators. And I'm looking for 2 things on my elder. I'm looking for evidence of MACD divergence, and I'm looking for the color of the bars. Alexander Elder has these programmed so that if they're green, that's a buy or hold. If they're red, that's a hold or sell. And if they're blue, it's sort of a transition, and you're free to buy, sell, or hold. And I like to look at my major indices, and what I see is S&P 500 is above the envelope, which is worrisome. That red dot signifies some MACD divergence, but green with MACD divergence on the weekly, blue on the monthly. So the S&P is still on a buy. Look at the NASDAQ, same thing, above the outer envelope, but without the divergence here, green, and blue. So the NASDAQ's on a buy. I look at the Dow, and I see MACD divergence with those red dots, or at least telling me to look for MACD divergence. But everything is green, and the big stocks are below their envelope. And I can even look at the Russell very quickly and see the same thing, green, but at the top of the envelope, green and blue. So if I want to believe that the market can go higher, I can do that. Now, you might be concerned about the fact that we are up against that or above the upper envelope, but it's not a very confining envelope. And let me go back. You can see here's going back to February 14 that we just ran up the envelope for the whole month. So even though being up on the top of the envelope is bothersome, I've seen the markets have a tendency to run up those envelopes. So Jim Cooper has pushed this in here. Appreciate it, Jim. Right. So I say that green allows you to buy. Alex would say it doesn't allow you to short. So I took it as a positive. Alex, when he talks about it, to agree with Jim, he talks about it as a negative. So when it's red, you can't buy. When it's green, you can't sell. And when it's blue, you can buy or sell. I guess to me it means the same thing with a little difference. Another thing I like to look at is the commitment of traders report. So I go to my futures, and let me see if I can find where I've got that person futures. And the commitment of trader report never projects well, so I'll just talk you through it. It looks at the people like us, which are the yellow bars, so the non-professionals, the non-professional speculators. It looks at the big money, which is the blue, which is the professional speculators like hedge funds. It looks at the red line, which are the commercials. Commercials, I don't usually look at, and as I've learned from John Person, he doesn't look at them either, because the commercial might be, let's say we were looking at the commitment of traders report for lean hogs, and I might have a lean hog farm, and I might want to hedge the price of my hog, so I might be buying or selling these contracts, and I have nothing to do with the market. I'm just trying to protect my money. So just to let you know, this is looking at open contracts, open interest, and in this case it's on the ESs, the E-minis, and you could see, if we go to the right edge, that the buying pressure by the non-professionals has really come off a lot. But if you look at the professional speculators, their selling pressure is not as great as it's been. So to me, it looks like a lot of indecision. Where it didn't look like indecision was when you watch the market run up in 06, 07, 08, it was a lot of us, the yellows, buying while the professionals were shorting. And then at the market bottom, we went short while the professionals started buying. So it gives you a hint of what the big money is doing from a big perspective, and you can look at any liquid futures contract to get an idea of who's buying and who's selling. Now, the next thing I like to do is to go into HGSI, and I'll start by going into the warehouse view, and I want to go down to one of Ron and Ian's Woodward Brown user groups, and I'm going to go into Major Markets Plus. Now, this program is a very powerful program. It's like having a Ferrari and only driving it on Ocean Avenue 35 miles an hour. It still looks good and it's fun. Yes, Mitchell, that's my car. And it looks good and it's fun, but you're not using all the horsepower. And I think sometimes I treat HGSI the same way. I've been doing some specific training for the folks coming to Florida, and just spending an hour and a half on the ranking module as an example, I found a lot of things that I forgot about. When it comes to views, I'm kind of boring. I like the scorecard view, which is a balanced fundamentals and technicals. I apply that mostly to lists of stocks. And then I put a price and volume filter on it, which is the 2.5 and the 150. I like the top-down view, which I apply to indexes and industry groups and to stocks. It's a predominantly technical, but rather than looking at just today, it does have the Force 13 in, so it's actually going back 3 trading weeks, but it's more heavily weighted to yesterday and the last 5 days. And then the other one that I use a lot of is the Elder Force, the 2-day Force up and Force down, because it gives me 2 days worth of price and volume, and I use those for group rotation. Now I use a bunch of others, but those are what I do most of my basic scanning with. So let's look at Major Markets Plus T1, raw combo sorted, and that tells you over this period of 2 or 3 weeks, heavily weighted the last week, that lo and behold, the Dow, the transports, the small caps, NASDAQ, Russell, all of them up at the top. That tells me if you have stocks, you made money this week. What's on the bottom? Volatility, bonds, gas, dollar, gold, silver not far above it. So first blush, that tells me what's working, what's not working. I'm curious, over the last 5 days, semis and small caps and the Russell nearly 3% up. As I said before, playing catch up to the big stocks. Volatility was down 5.9%. If I look at just Friday, I see volatility got hammered. Utilities sold off. That's probably a good thing if you're equities, because utilities were leading, which is probably a safe haven type of a thing in dividend. And the leaders were the Russell and the small caps, again, as I mentioned earlier. Now I'd like to go look at about 8 of these and get my own ideas of what the market is doing. Start in the S&P 500, and all right, first thing is I'm going to go off this view and go into a simpler view. This is the view I like for stocks, but this view does have the Eurekas and the Phoenixes, which is where my arrow is. In the red and the brown are Phoenixes, and there's sort of a market exuberance to the downside that you would sort of the follow through to the downside equivalent that you might see when a market was going to roll over. The green is a Eureka, which is, you know, when you get excited, you yell, Eureka, as Ian does so well from the front of the room. And that is our equivalent of an O'Neill follow-through day. So if this is real, it would not be a bad thing to see a Eureka this week as follow-through to the market taking off last week. That would be confirmation to my ears. So no Eureka in the past week. Let's just go to a simple moving average chart. Is what I want. All right. I'm going to use a simple moving average chart. Now, there's a lot of marking on this, but that's actually pretty good. A couple weeks ago, I looked at this chart in a weekly view, and I said, here's resistance. Here was support that we were going in between. And then I looked down here and I said, this is probably where my downside target is, and that I thought we'd probably be bouncing in this area until we broke out above or below. And you could see 2 weeks ago, 3 weeks ago, 2 weeks ago, last week, that we have broken above resistance and the S&P 500 has broken out. So go back to the daily, and these don't matter anymore because they no longer apply. Let me kill them. So let me tighten this up a little bit. Again, I'm looking at the S&P 500, and here's 09. And you know, when you look at it like this, we've had some pretty significant pullbacks, but really, when you step it out enough, this has been just a major move, as we all know. from about 700 up to 1950 on the S&P 500. Let me get this where I want to get it. That's good. One more small. So I like to believe that this run started back where my pointer is. And that would be in November of 2012 when we had our last substantial pullback. And if you go from the high, thereabouts, about a 9%, that was it. And if you bought TNA, oh God, if you bought a Spiders at the TNA, the leverage, you've been up 45% over 388 trading days. Not too shabby. Now, of course, it's not that easy, but when you look at it and you try and gauge, you know, how big are these pullbacks been? And I'm not good with this new mouse. 5%, 6%, 5%. What we've had this whole way up are 8%. We've had a series of modest pullbacks without a big correction. Since November 12th, the 200-day has held, and within days of piercing the 50-day in blue, we've gotten back above it. So major bull market. Now, what is a melt-up? A melt-up to me, and I'm not Ron, I'm not good at drawing, is when I start to see a big change in the trajectory, and we might be seeing that now. So melt-ups can be a lot of fun. I bet there's a lot of people who we know sitting on the sidelines, and when this market goes to S&P 2000, then these people who don't know anything will start buying. The big guys will sell to them, and the market will roll over. But I think, you know, I thought last week we might see the melt up. I think we saw it Wednesday, Thursday, and Friday. We'll see how much longer it goes. If I go elsewhere, I look at the NASDAQ. The NASDAQ pulled back beautifully to the 200-day moving average in a pretty good-sized pullback, about 10.5%, but not quite to its highs, but moving closer and closer, got back above the 8, the 17, the 15, the 200. NASDAQ looks healthy, although obviously we're going to worry about how far is this going to run. We'll see if it can take out its highs. If I look at the Russell 2000, when I see it at the top of the list, I know that my stocks are doing well. And you can see it gapped up on Friday. So the Russell 2000 got a little sloppy here on this 200-day moving average, knifing through it several times. But essentially, with a little bit of Morales talk porosity, it held, and it's running again. Still has a ways to go to take out its old highs. Whoops. That wasn't a very good line, but so to speak. We look at what's not working. We can look at volatility. And we are at, it's not record volatility, but boy, it's been a long time since our volatility has been below 11. And our volatility is, it's just crushed. Now, there have been a lot of things out this week suggesting that we can make a lot of money in a low volatility marketplace. George Lee likes to tell me that we lose money when volatility goes up. I like to tell him, but I make all my money when volatility falls. So volatility is flat. On my TradeStation screen, as I monitor the market during the day, let me go to my main page. I sit here and I watch TZA, I watch the VXX, and I like the BIS to watch, and the NASDAQ 100. And I'm watching them all day long because they give me a nice ebb and flow of what the markets are doing. And it's interesting, I see TZA and VXX start to move up before the indices start to move down. Well, every time the VIX sticks its head up, it gets popped down, kind of like the whack-a-moles that my kids used to play with, and those moles are whacked pretty hard right now. If I look at the dollar, that's another whack-a-mole tool. And the dollar ran right up to, I mean, I just love when technical analysis works. Ran right up to that 200-day moving average, and it died. Why is that important? Because our markets, especially some of the commodity-based stocks, do better in a weak dollar environment. Maybe in the long run, a weak dollar is bad, but the dollar can't get above the 200-day moving average. If that was a stock, that would have been a good short. Interesting to see what the dollar does. Now, you would think, with the dollar looking so lousy, that gold and silver would change, and they're like sort of here in hell. They're in the penalty box. Mario Draghi, nicest Italian besides Collardi. Yeah, he did all that. Yes, he did. Gold, I mean, I'm hard-pressed to get excited about gold. It's in a downtrend. It's way below the 200. Someday gold and silver are going to work. Maybe this will be the week. It wasn't last week. That's all I can tell you. And if I look at silver, it looks just like gold. So I put everything together, and I got my rally hat on. If I have to set targets, I like big round numbers, and I like, who knows? But it wouldn't shock me if we see the S&P run up to 2,000. What's interesting is this is not a U.S. only run. If you look at the Dow Jones World Index, it's at new highs or high up there as well. So I'm pretty bullish. Now let's go down and look at industry groups. So what I've done is I've stayed within the Woodward and Brown groups, and just because I never know who's on, if I was new to the program and I wonder why I don't see all this, I would go to the help, and I would go to where it says add-ons. I bring up my trusty browser, support add-ons, and here's all the add-ons, including mine, that we use. And these are what I'm using for Woodward and Brown. While we're here, a little bit, not much going on in the futures. So we now have 196 industry groups. We used to have 140. There's many different ways that I can tell which groups are working now. The top-down, it might be a good way of doing it. It's not what I normally use, because the top-down, as I told you earlier, although it's heavy weighted for the yesterday and the last 5 days, it still looks back as far as 13-day EMA, or about 15 trading days. So I'm not going to use this. I look at it. I know utilities have been strong. I know that transports have been strong. Ship and boat building, that's kind of interesting. That's not a typically thing that I think about. Railroads have been strong. Home builders, I noticed on my review this week, starting to move up. They were up 2.5% over the last 5 days. But I want to know, as a top-down investor, what groups are working now. So I'm going to go here. I'm going to go to the force up, and I'm going to see 95. Now, we've only recently gone to this new system using Bloomberg industry groups. So half the time I say Morningstar. And if you have, I can't do it here. The more info from the web, I think, opens up right to Bloomberg when you're in a stock. But there are many more groups, and that allows you to include things that you didn't have, breakout solars from semis, etc. You also want to make sure that you rank them by raw combo. And this would be the leaders according to the program this week. And this is the last 2 days. So as a top-down guy, I'm going to go through these, at least the top 10 to 20 on my own every night. I only want to know which things are outperforming their index. So I right-click on banks, change index group, and I'll look at the first couple because there were a lot of good-looking banks. Now, Bank of America, I'm going to go into my stock view. So before I switch views, I always start with an 8-day exponential in purple. Steve Bigelow calls that his T-line. I like to buy things when they break above the T line and sell them when they go below the T line. Look at how the T line provides support, and then in a downtrend, the T line becomes resistance. The rest, 17 in green, the 50 in blue, and the 200 in red are simple moving averages. Now, I'm going to make my charts very cluttered, but it works for me. I've now added to that basic Bollinger Bands, the group, which is a deeper gray. I've added PSARs in the green dots and the red dots. You probably can't see them very well. And then above here, I've got mobile breakouts in green and breakdowns. I've got my squeeze. I got my Bible gap ups. Didn't see that, which would be on this bar, but there are none. I've got my high jump bar, making sure it's not up at the top. When it gets up high, I see pullbacks. Then I've got my technicals, the forces and the bongos. I want to see mostly green on those. Down below, I've got my pocket pivots. Dark blue is a 10-day. Light blue is a 5-day. Dark red is a 10-day. Light pink is a 5-day pocket pivot. And then these are both volume windows on the instrument in question. There's my Eurekas and Phoenixes, which are calculated now on the NASDAQ, but they're not calculated on the individual stock. And then I have my Kahunas on the bottom. I have a double volume window because I have different attenuation, and every once in a while there'll be a spike, and it suppresses the rest of the volume. So on one of them, I turn off the spikes. Up here, you have 8 quarters of earnings and revenue. The next 2 quarters, sort of a graph of what you've seen. And then you see percent change, which is versus the quarter 4 quarters ago. The O score is a fundamental measure that takes into account everything above it on the earnings and the revenue. And then I see, because I'm a O'Neill type groupie, EPS rank, relative strength rank, and group rank. And Ian taught us to combine the 3 of them together into ERG. These gray bars are bingos, and you get a bingo when you throw the baby out with the bathwater. So when you see the bingo, the stock or index is usually trashed, and then you sit and wait to start to see your kahunas coming in after the bingo, or your Eureka, which is telling you it's time to go back in. So Bank of America has been in the penalty box after they had some accounting issues that caused them to flub up one of the Fed tests for where they have enough, I guess, collateral or funds, whatever it is. It's coming back. It's at an interesting time here. It's got back above the 8-day and the 200. It's right at the 50. You see the strength of the group, a pocket pivot. People are saying nice things about Bank of America again on CNBC. And it was in a beautiful uptrend over the last year or so until this little stub. So this might be one to put back on your radar. And if it can get above the 50, this might be one you might want to be getting into. Citi looks a lot, but it's been below the 200 for a long time. I'm less interested in Citi. The one I do like a lot, have liked and talked about, is Wells Fargo. That's a leader. And if I was putting together a leader index, Wells Fargo's in it, not Bank of America. Lower left, upper right, relatively medium tightness. Everything's green above. Had a pocket pivot on Friday. I think banks want to go higher. If I right-click and hit back, next group is semiconductors. I right-click, change industry group. Intel, can't be a great market when Intel's leading, but there's a lot of neat-looking stocks on this list. And I'm joking because Intel's been a leader as this market has recovered, and let me bring that back. And you can see Intel in a nice move, bunch of pocket pivots this past week. Everything is green. I think there's more exciting stocks. Broadcom had a Bible gap up with the green bar here. With the kahuna, multiple pocket pivots leading up to it. We had plenty of time to buy it as it came up above the 50. I didn't buy it. I wasn't smart enough. You had a kahuna back here. It's running. Is it running too fast, too far? maybe. Micron, this has been a big leader, and it's been a big leader if I go on a weekly chart for quite some time. Going back to the beginning of 2013, I think this stock continues to do well. Micron has a lot in common with the airline industry. You're probably wondering, what the heck am I talking about? Two industries, semiconductors, especially DRAM manufacturers, and airplanes, where supply has come out of the market by mergers and acquisitions, and now all of a sudden you can make money, and therefore you change the color of your stock. So one of the arguments about consolidation is it makes the companies a lot healthier that survive. Qualcomm had been a big leader going sideways. I'm not a big Qualcomm guy, but it's going sideways at the 50, had a kahuna this week. Everything's green in a squeeze. Might be an interesting place to buy. You know where to set your stops, right below the 50-day moving average. Couple that I like, SanDisk. I talked about this one last week. I keep thinking it's too expensive, and it keeps getting more expensive. It's a leader. How many cameras, iPhones, iPads, computers do you have, and how many of them do you think have SanDisk components or memory in them? Probably all of them. Skyworks is one that's being closely linked with some of the new iPhones, and you can see they've had a nice run. And Microchip Technology, go to weekly to see what it was doing. You can see a nice run. It's gone sideways for a while. And if I go back to it daily, Microchip Technology looks like it's taking off. It's certainly a lot less extended than SanDisk, multiple pocket pivots this past week. And then the kind that I like to buy, I'm not saying I'm buying it, are things like Ambarella here, where it's kind of a new stock, but it had run up from 6 to 36, pulled back to 24, and now it looks to me like it's had a chance to start basing here, and it moved up above the 50. So if I was traveling tomorrow, well, I'm not a Qualcomm guy because I remember back 10 years ago when it was really a mover. I like Qualcomm. But I might consider saying, you know, if it can get above its prior high here, then I believe the stock's going higher. So I might put in a buy limit tonight, a conditional order that says if it trades above 27, put in a buy limit at XYZ. And that way, if the market was down tomorrow and I was on a plane, it would never trade up. I wouldn't fill it. But since I'm not working anymore, I'll watch it and see if I want to do something tomorrow. And I'll go through the top 10. We'll go through a bunch tonight. Next one, communication equipment. Feels so much like 2000. Technology. I mean, I look at Sienna, and I see why it's here. It had a big move up. It's below the 200. I usually don't touch stocks below the 200. Here is Comtech basing for 7 months. Must have had earnings. Now, if I right-click and go more info from the web, couple of changes to show you. Here's the Bloomberg. If I wanted to find out more information on the group. Here is earnings.com, which is the give me some earnings numbers. I like FinViz, and it'll open up directly into CMTL, and you could see resistance broke through. Must have been something to do that. And I can go down here and I could see beating estimates and raising fiscal year 2014 outlook. So now I know why. Cisco broke above the 200, had a Bible gap up, sort of maybe getting ready to run. Here's the index by itself, so that's enough. Back, just a system. Highlight, right click, change. Baidu, what a great week. At least a great couple of days. And you could see, I hate when I do that. You can see Baidu, you know, this is my pattern. Uptrend, sideways, pull back. You know this is a squeeze. You can see the yellow here, the 50, the 17, the 200, the 8, they're all together. I could have, if I was smart, could have gone in here when it broke out of that with a PSR reversal, a pocket pivot, and kahuna. that was when to buy Baidu, and that would be going back on the 21st. I think you can still buy Baidu. Everything is green. You had another pocket pivot on Friday. It looks like it wants to run. Obviously, it would have been nice to have found it. I look for these stocks that have a PSAR reversal close to a mobile breakout from a squeeze, and I did see it. I just didn't pull the trigger. Yahoo looks just like Baidu, except I don't like it nearly as much because I know the company. But same pattern, in a squeeze, had a mobile breakout from a squeeze, a pocket pivot, and a kahuna. Maybe I should like it. Also PSR reversal on Thursday. Google, not enough information. Here's the old Google. This is very common. You'll see something bottom, break above the 50, retest the 50, and that's when I like to get in and then run again. I've got some calls on Google. We'll see where they can go. And I'll go down the list. Group number 4 or 5, biotech. So I remember in January this thing, Intercept, ran up to 400, and I told people not to buy it because I thought it would be just like, what was it called? Intramed. It might be okay to start buying this now. I wanted to see the stock calm down before I get interested. They've got a drug for an unusual disease. It's not ready for prime time. Even though their stock is $252, their market cap is only $5 billion, $5.6 billion. It's a lot for preclinical. They had good news come out around the first of the year. The stock ran up to $500 from $85. This is when I said don't buy it. Ran up, failed at about the same point. I think it's getting interesting now. I'm not necessarily buying a lot. Very closely held, small float, which is why it ran so much. But I think the stock has a shot, and I'd much rather be thinking about it after it's had a time to base for a couple of months, and a lot of the heat has come out of it. Not saying to buy it, but I'm taking my don't buy off. Grifols, what a beautiful looking chart. I think they make plasma. Never knew how they made money. Great earnings per share growth you can see coming in. Everything is green up here. Had a mobile breakout from a squeeze. Bunch of pocket pivots, kahuna, good volume coming in. I like a lot, and this is on my buy list. This is Grifols, S-A-G-R-F-S, a IVIG company for hemophilia. MPS Pharmaceuticals is a little dangerous in my opinion. There were rumors here that Shire was going to buy it. That's interesting. I just was reading an email. I thought of some folks that were in a meeting that was on Friday. Back to my thoughts. Shire it was rumored to put in a bid for them, traded up high. Then they said they have had no discussions with Shire. They changed management, which might be a good thing. I don't know what to do with this guy. If you want to play whether or not Shire's buying them, be my guest. I'm not in it. ISIS, I am in it. I bought it off the double bottom with a PSAR flip, a pocket pivot, and a kahuna. It was a bottom fishing stock. They've got some interesting things going on. They've been around for a long time. We'll see if we can get through the resistance here. I might take my profits. So Celgene was in the doghouse, now above. It's 200. I'd like to see it heal some more before I get as bullish as I have been, but I've been a big fan of Celgene for quite some time. I think the point here is I'm not going to go through all of these stocks. My point is that biotech has gone from the star to the toilet and maybe a star again. This isn't the one I wanted to hit. This is Mankind. God only knows. I blew it on this one. David and I don't know anything specific about this company. Ghilardi and I talked about it, in that they have an inhaled insulin product, it's a weekly chart. And anybody that's diabetic would want to say, I would love to take an inhaler instead of injections. They failed the FDA twice. They're due for a review a third time in July. I think there's a good chance they get approved right now. And so do others believe that, which is why the stock has had a big run up here on the weekly, and we go back to the daily chart. The fleas are, they haven't announced a partner. You can't bring a diabetes product to market as a small company without somebody else there to help you. So that's missing. And according to my expert in the field, there is a lot of commercial issues, shipping issues, storage issues. So I'm still bearish on it, but I missed this run, and that was one hell of a run. Biotech is off the mat, meaning it's going back up, at least for now. Oil exploration and production, they've been big movers. Let's try and pick it up a little bit. We'll look at just the top two, and then go down to Diamondback, which is one of many of our favorites. This is Apache. This is an old name, and you can see it's been in a big move from March up from about 78 to 95. That's about 20% move in about 3 months. Everything is green. These guys have been doing well as a group. Those are boring, the big ones. I like the little guys. They're probably more dangerous. Here's FANG, F-A-N-G, Diamondback. Look at the earnings per share growth. It's a baby stock. Look at the curve of earnings and revenue. Like this one a lot. Have been in it for a while. A little one that I'm in is Kodiak, K-O-G. I think it wants to take off again, mostly green, coming out of the mobile breakout from the squeeze. And then you've got others, and there were a lot. You look at, I'm going to point this guy out here, Bonanza Creek. A lot of these stocks took off about 2.5 weeks ago. And if I remember correctly, it had to do a lot with the stores on natural gas pricing going up. So this has been a good group to be playing, and one that's been heading up. Right-click back. I'll look at services, and then we'll look at the downside, and then we're going to look at some shortcuts. I mentioned this was my number one, whoopsie daisy. This was my favorite group, one of my favorite groups last week. It's still a very favorite group of mine. Schlumberger and Halliburton look a lot the same. Steady upturn, breaking out to new highs, all's green, pocket pivot on Friday, good volume, they make money. Weatherford was one of my favorite stocks last week. I mentioned favorably Kahuna, pocket pivot on Friday, starting to make a run. Good earnings coming into the stock. And here's my Halliburton. It's just like Schlumberger, maybe a little bit less intraday movement, but breaking out to new highs out of the squeeze. So I think these are working. See if there's anything else I want to point out here. I mentioned the automobile OEM index. Those are the manufacturers. I want the parts, my bad. There are a lot of things to like in this list. Pullbacks and running again. This is Johnson Controls. This is Borg Warner. These are the guys that put the audios, Harman, basing, mobile breakout from the squeeze, pocket pivots 2 days in a row, and a Kahuna. Think I might like this stock? I do. And it had a PSER reversal. It's on my list for tomorrow. Goodyear Tire and Rubber. Here's that Gentherm, beautiful run. The auto parts have been on fire, and when you see how many cars they're selling, it's easy to understand. If I want to see what's not working, I can go force down, and I could see it was only 3 groups. Interesting, semiconductors are on the top, and some of the manufacturer services were down here. So these must have had sell-offs after being up previously. We'll just look at Amcor because this has been a big winner. Yeah, so it just sold off on Friday. I don't know what to do to make it out of it one day. All right. So after I've done this, I am every time I see a stock I like, I right-click on it, I click Add to Group. I'm not adding this one, but I'm just showing what I do. And I go into my weekly group, and I throw it into my buy list. So by the time I finish my weekend review, I compile a list of stocks that I like. And good thing none of them are in the forced down EMA. What I told the folks I'm working with for Florida, when it doesn't look right, you got the wrong filter or view on. So let me just go into scorecard, combo, no filter, all stocks. So these are the stocks. A lot of stocks made my buy list this week. And what I do, and I'm not done yet, but is I will stick them into my trade station. I'll make sure they don't have earnings coming tomorrow. I know earnings season is over. And then I put them into sections, breakouts, pullbacks ready to run, pullbacks waiting for signals, bottom fishing, and leaders. And then I can do numbers of things with them. I have a system that allows me to auto trade them, where I pre-program certain buy and sell signals, and it takes entrees and exits without me interacting. But for the most part, I stick them into my radar screen, and I scan them during the day, real time, looking for Bible gap ups. Emerging markets bull. Big move on Friday. And I monitor, and these are the indicators that I have created for me. I monitor the indexes, the futures, the 3X bulls and bears, the sectors to see what's not working, my long and shorts, and then what I call my tigers. And basically, these are all the stocks on Friday that had a Bible gap up. And I'll pick this up early in the day so I know what to jump on. And I can monitor for pocket pivots up and pocket pivots down. I look for green candle lows, red candle highs, multiple breakouts from a squeeze, breakdowns. So if I want to see who's breaking out from a squeeze intraday, I can see all the stocks that are having mobile breakouts from a squeeze intraday. Back here. All right, what else do I want to do? So a lot of times I don't have all day, and I know many of you also don't have the 2 hours that it's taken me to do what I'm doing here. Let me show you a couple shortcuts, and I'll answer any questions I haven't gotten to. So you come into the program, and I want to try and address this for somebody who's new. All right. This is what you boot up. And I always joke, which is more powerful, the Ferrari or the program? And it's the program. First thing I do, I usually go into the designer, and this is my, I don't have all night routine, and I go into smart groups, and these are pre-formatted scans that come with the program if you do the add-ons. And I look at some of my favorites. I go to Morales and Catcher and see what were Bible gap ups today. And I recognize that I only have 1,000 stocks in TradeStation, and if I don't have these, I want to add them. I look at who had pocket pivots. Okay. I go into Woodward and Brown, and I sort of want to go to best of, and I want to see how many of these do I own. 1, 2, 3, 4, 5. I own 5 of their top 10. I know I had a good day. But I want to see what's working. What's working under $15? This gives me an idea of what fish I want to be fishing for. I love Gallardi sprinters. I take a look at these as well. Now, it takes time to go through all those groups. Let me show you my favorite shortcut. Tools, Group Inclusion Report. Click on it. Now we're going to make a group from this. And we're going to call these Sally, GIR Web. So I remember which one was it. And let's look at, I'll take 20 stocks to look at. And now I'm going to check off my favorites. I like sprinters. I go to Woodward and Brown. I like Best Criteria. I got this mouse that's a gaming mouse. It is so sensitive. I'm using the mouse pad. I like Best Criteria. I like Best Of. I like Best Of under 15. I like Demand. I like ERG. I like Growth. I like HGS 100. I like Leaders. I like QEPs. I like Shadow Stocks. I like Upside Groups and Stocks, both of them. And I like Strong EPS. Then I go down to my list. And I love breakouts from a squeeze. And I love pullbacks to the 50-day with a kahuna. I go down to Morales and Catcher. I like Bible gap ups. I like pocket pivots. George, I know you're listening. Please create favorite buttons so I don't have to do each one of these every time. So if you had a favorites, I could say Jeffrey's favorites, and I wouldn't have to redo that. Then I go make sure I got it set up here, make a report. So if these are all groups of great stocks, then wouldn't it make sense if you have stocks that are in lots of these groups that they might be the ones you want to look at? So I'm going to hit OK and let magic happen. Then ask if I want to make an index, and the answer is no. We're going to call this, we'll just call it GIF. I hit save. Sure. And it's doing its trick. I don't want an index, but who cares? Here are the leaders. Let's see, Gentherm I showed you. VIPS, I didn't get to it, but you all know VIPS. Harman was that one for the cars. Micron we looked at. Oil and gas, airline, airline, airline. MLP, airline. Anybody think airlines have been a good place to be? So that tells you which are the stocks and how many groups they went in. Now the nice thing is, go into user groups, so I look for Sally, and it put it in a user group. So I can double click on the first one, and I'll go through them very quickly. Let's just see what we found. Got a couple more shortcuts, and then I'll make a couple last comments. Alaska Air, lower left, upper right. It's been in a squeeze as it's going sideways. Had a mobile breakout from a squeeze on Friday. Everything is green. This is one of my favorites and everybody's favorite airline stocks. Continental Resources, this has been a great oil and gas play for a decade, or at least for 5 years, maybe a decade. Going back to 2009, I buy this thing when it drops below 100. Doesn't happen often anymore, but used to always be good times. Been a great stock for a long time. Delta, love Delta, got this stock. Lower left, upper right, tight as can be. I had some married puts. I'm going to probably buy, which I'm out of now. It just looks like it's had a long run. It had a red candle high on Thursday. It's near the top of its high jump. Eventually, these guys are going to correct, but boy, are they on a run. ETE is one of these oil, it's a midstream oil and gas, natural gas transmission. Pays a small dividend, 2.6%. Lower left, upper right, tight as can be. I keep thinking it's expensive, and it gets more expensive. EOG, same thing about CLR. It's a strong oil and gas play. FleetCor, interesting that this is back up on our list. This is a stock that used to be a big time leader. I used to think of them as credit cards for gas stations and for truckers. You saw the big run. It's gone sideways. Maybe it's getting ready to wake up and run again. Everything's green. global breakout, bunch of pocket pivots. Next one is Gentherm, which we already looked at. Goodyear Tire and Rubber. If you want to play in this arena, there's like, these are the cheapest calls. I mean, there's like no premium. I've got some of their calls. I've had some off and on. This is all a play on the resurgence of the U.S. auto industry. Look at the run this had, 14 up to 28. Kind of been a little bit loose up here. See the group strength right here, those auto parts. Great place to be. Harman Internationals, they make the radios for the cars, had a PSAR flip on Friday, mobile breakout from the squeeze. Kahuna's, pocket pivots in a Kahuna, already said I'm going to be there tomorrow. Planet, talked about this a couple weeks ago when it broke above the 50. Let's look at this. This is Jeffrey's favorite setup. Big run up. Actually was in it on the run up. Then it sold off. And then when would it be a good time to get back in? Break above the 50 would be what I'm looking for. All right, I'm in. Pocket pivot above the 50, mobile breakout from the squeeze. That was at 37, and it's now at 47 in about 2.5 weeks. And I could actually show you those exact dates because that's exactly how I found the stock. Micron, we already looked at it, lower left to upper right. PEIX, I don't know about this one. It doesn't, I would need to see something showing me momentum. It doesn't have much volume. It's got great earnings per share. Well, actually, it had great earnings per share. Don't know what this means. We'll have to see. I'm not a big fan of PEIX. Love Southwest, but I can only own so many airlines. Looks a lot like Delta. Wolfpack. Spirit, maybe this is the best one to be buying now. Good earnings per share growth. Pull back to support. Multiple pocket pivots. Everything is green. Spirit Airlines, SAVE. Tail education, I suck at buying education stocks, so I just skip them. But gone sideways after an uptrend, multiple pocket pivots, a mobile breakout, PSAR reversal. Here's the Blackstone. I showed you this earlier. I got in it back here. It might be time to think about it again. Still well below its previous highs. Everything has turned green. One of the reasons why I love Blackstone, it's now down to 4.1. It used to have a 7% dividend, but stock's gone up. And then, again, I mentioned this last week, kudos to the Gill board because there's some folks on Gill's board that were buying Under Armour over here. Probably got slipped into it by the pocket pivots, the mobile breakup from the squeeze, and the kahunas. So a big quickie, and then here's VIX, which I think looks like it wants to run again. Everything's green, mobile breakout, pocket pivots, volume, breaking above the 8-day exponential. So a simple thing called the group inclusion report, if that's all you did, you'd probably make some money. Now, the other thing that I do for a shortcut is I go into all securities and open up the warehouse view. I'm going to do it that way instead. Identify all securities, and I have my favorite views. So I might go into my name and find volume buzz 5 times. So these are stocks whose volume were 5 times normal. Now they may all be horrible, but sometimes volume gives me clues. That's kind of a nice day on Friday, but I don't like the picture. Nothing. Bob Evans. Something's going on in the poultry and chicken world. I know you got that acquisition going on, but huge volume, a pocket pivot, a kahuna breaking above the 50. I don't like it. It's below the 200, but I'm going to have to look at this thing. So that might be one that gets onto my watch list. I don't know anything about this one. All right, well, maybe I was too tight. I might go back to my 3X type filter and see what's on this list. A lot of people have been talking about iCloud as one of them. It's an IPO. There's not much information. Deep pullback, volume coming in, a Bible gap up on Friday. You know, maybe this stock is going to turn around. Maybe this is something we should be looking at. So I look at my volume. Then I come down here and I find my Kahuna Force. We've got Kahuna, Force is positive, it's the right price frame, it's within 1% of free parking. Pull back to major moving average, and I'll go look at these real quick. I'm not going to look at all of them, but all of them by definition, uptrend, pull back to a major moving average, and have a Kahuna. Hershey Foods. God only knows what this is. Polaris, looping back up with the Kahuna. And every once in a while I'll go through this and I'll find something I want to buy. Like that one, Star Bulk Carriers. Kind of crazy name earnings, but bunch of Kahunas. Pull back to the 50. Now it's, mobile breakup from the squeeze. No dividend. This will go on a watch list. So I'm now identifying, I'm taking my 8,000 stocks and I'm doing various scans to find ones that I'm interested in. My strong technicals. This is another list that I look at of stocks on a morning basis, on a daily basis. YRC Worldwide is one that's on my watch list. Why? Because I don't know what's going on here, but I like it. Here's the group strength. Everything is green. Mobile breakout, pocket pivot, Kahuna on good volume. And it's got a lot of, it's got earnings growth coming into the stock. The turnaround play. I'm interested in that one. I know where to set my stop. That was one I saw on that list. This is some great. Look at American Airlines. I mean, should we be owning American? I think so, but I already got enough airlines. Greenbrier, same as Trinity. Another thing I have a lot of interest in, but I already own Trinity. Everything is green. And I go back down the list. I look at PSAR reversal close at a squeeze. So these are stocks that should be at an uptrend. They should be squeezing, and they should be right below the PSAR reversal. Here's Gentex, uptrend, pullback, squeezing, mobile breakout, Kahunas. See that little red dot above price? That's the PSAR. It trades above that dot, I'm in. So what I have done is I have set up, and if they're not in my add-on, George is convincing me I need to do a new add-on. I'm going to have all these in my add-on so you can do this yourself. I mean, here's one of the infrastructure plays. Uptrend, sideways, mobile breakout, all green, pocket pivots, Kahuna. It's right below that PSAR dot. Takes out the PSAR dot, I'm in. So this is why I love this program. I build in my scans, and it's so fast. If I'm a Morales and Catcher guy, code blue, pocket pivots, combo driven. And I'll go take a look at the top 10. You want to see some good stocks? Or should I say more good stocks? Come on. This is a marijuana for epilepsy company. Uptrend, pullback, good news on Friday. Mobile breakup from a squeeze, Bible gap up, pocket pivot, Kahuna. Let it settle down. It's very news driven. CoStar Group, it's below the 200. Angie's List. Keurig, what the heck is going on here? Is Coke going to buy the rest of them? Someone must think so. Huge volume, Kahuna, pocket pivot on Friday. Everything's green. Mobile breakout from the squeeze. Bob Evans is a gill stock. Who would have thought? Huntsman Specialty, breaking out. So basically, what I do on a daily basis is I go through the top down exactly how I showed you. I then supplement it by looking at some of my favorite warehouse views. I forgot, since he's on tonight, never happens. I have to make sure I include his view. I've shown you many of the ones I use. I also love, as people know, the sprinters. And you notice all the green? Look what the sprinters were. This is combo rank, auto parts, auto parts, auto parts, auto parts. Airline, that's an airline, by the way. Midstreams, EPs. You notice things coming together, no matter how we look, we find the same things. I think we're in the midst of what might be a fun market for a couple weeks. Obviously, that can change in one day, for all we know. It's been very news-driven and volatile. Earnings season, for the most part, is over. I wish you all a great week. So let me just say a few more comments. I'm on a roll. Number one, I own a lot of stocks. I trade a large portfolio. I automatically set my stops, and I don't care if the market goes up or down. My stops protect me. When I get deep in the money, I take married puts when I'm worried about the market, so that protects me. Since I'm protecting my risk and I have a large account, I probably have more stocks than anybody else on this call. I'm probably not a good example for that. I find my stocks using HGSI. What I do in TradeStation or Thinkorswim are just tools to allow me to do it intraday. Oh, I got something exciting to show you. Don't go yet. The programs don't make you money. You have to have a plan. You have to have, here's my setup, here's my trigger, here's my position size, here's how I buy, here's how I protect my losses, this is how many positions I have. That's a trading plan. HGSI helps me by defining for me what stocks I want to go after. Now, if I go down to the bottom, I'm going to show you a neat thing that just came out. People know that I'm a big fan of EdgeRater. I've got more reasons to like EdgeRater. They also know I'm a big fan of seasonality, and I use Magenta Best Choice for that. EdgeRater just came out with a new upgrade, and that upgrade allows you to take any list and then run it for, this template is called Now on the Annual Trends, and it's going to tell me historical performance by stocks, 2 weeks, month, 2 months, and so on and so forth. Now, it took me a while to figure this out, Chris, if you're listening, that I had to go into where the pencil is, go to Data Update Options, and I took it as long as it would go. I put 12 years, and I didn't even think we had 12 years worth of data. The default is 2 years. Then I run the program on my buy watch. And it basically is telling me historical volatility and historical price performance average for 2 weeks, a month, 2 months, and so on and so forth. How many up years versus down years. And, you know, I'm going to have to talk to Chris about helping me create some more fields like percentage up years, because 10 and 2 is great, but 5 and 0 and 8 and 0 might even be better. How do I bring them up to the top? I can then do this by performance. The Capstone Paper, KS, is up 6% average over the next 2 weeks. Save, up 4%. I think this is very valuable information as I look at the stocks that I'm thinking about buying. Why? Because I don't want to buy either of these renewable fuels because over the last 8 years on GPRE and 9 years on PEIX, down 13% and 10%, over a month, 25 and 10. So not a good time to be buying those. I think this is a great addition to what's already a great tool. So on that note, let me read off and see if there's any questions I haven't gotten to. So Bradley, everything that I own for HGSI, everybody that attends the Florida meeting will go home with. So I will work with George this week, and I will put together a add-on. It probably won't get done until next week, to be honest, of all my stuff. And then George will be at the Florida meeting so he can make new filters for us while we're talking about it. I thank the positive words from the people who said that. If you know, PB in October is all about HGSI. If you've not met George Lee, you know, it's a funny story. He rubbed off on me and made me a whole lot better trader, which was why I like him so much. but George has got a great way of doing things. And you could scan for these things intraday with TradeStation Thinkorswim. I use HGSI at night. And a little bird has told me that before too long, I'm going to be able to do daily intra-market updates on HGSI, and boy, that would be amazing. On that note, I think I got all the questions. And good night, everybody, and have a great week. Start the week bullish, but don't trade the market I think we have or you think we have. Trade the market we get, because things change on a heartbeat. Good night. I'm stopping the recording now.